For the first time since 2019, U.S. housing inventory has crossed the 1 million mark. This is great news for everybody. I'm going to explain what it means next, along with the jobs report and the direction of the market as we head into the summer. If you get some value out of this or you like what you hear, make sure to subscribe to the channel, click on the bell for notifications, and if you want to schedule a call with our team, you can do that with the link in the comments. For the first time in 6 years, U.S. housing inventory has eclipsed the 1 million mark. This is great news for a lot of people. A lot of buyers had said, if there was only more inventory, I'd be able to make a move. Well, we're seeing it come to the market. Now, year over year in our marketplace in the greater Philadelphia area, inventory is still below the 2019 levels, and it's up over 16% year over year through the month of May. So you got to look at, obviously, there's states like Texas and Florida that have a ton of inventory coming to the market. The good news here is that it's rising. And if there's one area where the market has improved for consumers and for the people watching this, it's with competition in acquiring your new home. There's a little less competition than there has been. What we also have seen is we just got a jobs report today. The jobs reports are always interesting. U.S. payrolls increased 139,000 in May, more than expected, which has been the trend all year long. The estimate was 125,000, so it beat it by about 14. And unemployment held at 4.2%. Worker pay grew more than expected, with average hourly earnings up 0.4% during the month and 3.9% from last year. So what we're seeing is the job market's still pretty healthy. Unemployment hasn't grown. New jobs, non-farm payrolls, they came in above the expectation, and the market's starting to rally as we're filming this. So we're seeing more inventory. And what this jobs report means is that we're likely to see rates hold where they have been around that high 6, low 7% range for the foreseeable future. The reason I say that is Jerome Powell and the Fed, they've got their dual mandate around inflation and around employment, and the labor market clearly has not broken. We're seeing more jobs get added, not less. So what does that mean for housing? What that means is the market that we're in is the market that we're going to see for the foreseeable future. We're going to see some homes, they sell fast. They have multiple bids. They're moving really quickly. We're going to see some homes take a little longer to sell. Sellers may have to consider making some adjustments. We're seeing that showings are down over 7% year over year. That's where the competition's improving. And you want to look at this data and be very clear that just because the market's not as white hot as it has been, there are opportunities. I'm going to outline 3 opportunities for consumers right now. The first is going to be for home buyers. Opportunity number 1 is the home that you've been watching on the market that has not sold yet. And the flag there, the indicator is going to be, what are their days on market? Are they hitting 14 days? Are they hitting 21 days? Right now in the greater Philadelphia area, the median days on market is hovering in that 19 to 22 range. So if I'm seeing a home on the market a couple weeks and it hasn't sold, that tells me there's the opportunity to make an offer on the property and negotiate instead of bid against somebody else. So that's opportunity number 1. Opportunity number 2 is for home sellers. And this is an important part of the analysis because we're still seeing we're at a deficit in inventory because we haven't eclipsed those 2019 levels yet. And the way to do that is look at what your competition's like. If there's no other homes like yours on the market in your township, in your school district, in your neighborhood, that's good news. Maybe there are some that are sitting and not moving, and we're certainly seeing neighborhoods like that. If you're a home seller, the opportunity to be the next property to sell is to price your home right below all those offerings and make sure you've got the best number and potentially the best condition so you can generate a lot of interest in your home and undercut the competition to be the next one to sell. That's opportunity number 2. And opportunity number 3 is going to be for the folks that aren't afraid to get rejected. What I mean by that is sometimes you got to test the market a little bit. Sometimes it's worth writing up a lower offer, even when people tell you, hey, there's no way that's going to get accepted. Sometimes it's worth coming in and asking for everything you want and seeing what's going to come back, because a lot of agents are afraid to make offers. They're giving you bad advice. That's not how we operate at our organization. And we've seen the average list to sales price ratio has dropped down in the suburban counties. Last year it was all over 100.4, 100.5, 100.6%. Well, we're seeing that number now is trending between 99.5 and 100.3% of the asking price in Chester, Delaware, and Montgomery counties. Montgomery County is the only one that's higher than 100% right now. In the city of Philadelphia, we're seeing 95.4%. So that's the opportunity. A lot of buyers are afraid to make these offers. And if you're willing to be aggressive, you're willing to say, hey, you know what, I'm out at this number, I'm not going to negotiate anymore, then there's an opportunity for you. This data right here that we're seeing is going to help you make better decisions. And you've got to find an agent who knows how to communicate that and see those three opportunities. Days on market 14 plus, pricing your home below the competition, and being aggressive with offers. Three incredible opportunities for home buyers and home sellers right now. Are you going to take advantage?